Want to make sure your hard-earned money is in good hands? In this video, we're going to cover off how to choose the right financial advisor, what you should be paying for that advisor, and the different certifications that we have in our industry to help you choose the right person for what you're looking for. We're all looking for something a little bit different. I talk to Canadians every single day in different situations, and the current theme I find, and I've found for many years, is a lot of you are paying for advice that you're not getting, and I want to help you move away from that and start paying for proper advice. And that starts with choosing the right advisor. So just the other day, one of our viewers, Evil Twin, posted a comment asking, like, Adam, how do I know when it's the right time to hire an advisor? And how much should it cost both now and ongoing? And what's the structure of that? And someone else commented right away, like, yeah, I'm looking for the same thing. We've had this a few times. So I thought I'd kind of put this out there to help all of you. Again, this channel is to help educate all of you to make better financial decisions. And a big part of that, obviously, is finding the right advisor or planner for your situation. Typically, most of you will fall under what's called the mutual fund advisor. And these people are typically at a bank or large financial institution. Most of them don't have any certification beyond maybe a mutual fund license or maybe an insurance license. And they're selling you a product with an embedded commission. And unfortunately, that's probably the large majority of you watching. And that's also the large majority of you that have transitioned to DIY. And I've talked about this before, but a lot of you have moved from one end of the spectrum to the other. And what I mean by that is you were sitting over here in mutual funds, in embedded commission products, and you were paying for the product, the back office, and the advisor. And when I ask you, are you happy with the product? You say no. And are you happy with the advisor? And you say, well, no, I never hear from there. There's no planning. So you move from that all the way to the DIY. Like, why would you pay a high fee for no advice and, a subpar product when you can move to this spectrum and say, okay, well, I can pick my own ETF and it's maybe even going to look the same as the other product, but way cheaper. And I wasn't getting advice here, so I'm okay not paying for it over here because it's all the same. And I don't blame you. I honestly don't blame you. And a lot of you had made that transition. But there's this middle ground of really good advice. And I think a lot of you need to take a step back. And I think a lot of you that we've worked with here over the last few years have started to realize that. Like, there's this middle ground. And our channel, what we're trying to do is help fill a lot of that middle gap just through free education. Now, I was talking to someone just yesterday and they said, look, Adam, your channel is great. It gets me 80% of the way there, but it's that last 20% that makes such a difference. Like the tax savings on that last 20%, the income, the flow, the psychology behind all of that. That's the 20% that I need your help for. And I would say that's typically it. Like, you can get a lot of the right moving pieces of the puzzle, but how do you get to that last little bit that saves you the most amount of money and taxes and cash flow and all of that? So as you start looking for an advisor, you want to look at certification. So in a financial planning area, you want to look for a CFP, a Certified Financial Planner. Myself, I'm a Certified Financial Planner. Our team is here. Now, a lot of people that say work at the bank or financial institutions don't hold a CFP. And this is where you have to decide, am I looking for a financial planner to help me with tax and income and cash flow planning? A lot of what we talk about on this channel. Like if this channel hits home for you, like, I need a retirement plan, a financial plan, more of the planning piece of it, you want to go out there and find a CFP, a Certified Financial Planner. We'll put a link below on how to find a CFP in your area. And most CFPs will work across the country. For us, we work with people right across Canada, coast to coast. So if you're looking for a CFP, reach out to us, or again, we'll put that link below. Now, if you're looking for the investment advice, right? There's two types of people out there. There's the planners and there's the investors. And for us, when I hire an investor, I want to hire a CFA, a Chartered Financial Analyst. And again, that's someone that's gone through the education, has ongoing education. Those are kind of the top of the scale. And then it goes down from there. There's kind of sub things. One of them is called a CLU, a Chartered Life Underwriter, and that's someone that has advanced estate and tax planning. I just finished that myself. Brett on our team has that as well. And that's kind of like a level below the CFP. There's a personal financial plan. There's a lot of different designations, but if you want to find someone that has a top education, has somewhat of a fiduciary duty on the most part, most firms will carry that as well. If you're looking on the planning side, a CFP, on the investing side, a CFA. Most people in our industry will have just a mutual fund license or an insurance license. That's like a 1 week to 1 month course. So just be aware of who you're working with, and then what type of product, which I'll cover here in a second. So how do you figure out what type of advisor that you need? Well, again, if you're looking for the investing side, you want to look for a CFA. Now, if you're walking into your bank with 20,000, 50, 100,000, typically under 250,000 or so, you're probably going to be working with a sales associate, a financial advisor, someone that's not certified. It's someone that has their mutual fund license most likely, and is there to help you out. Now, that's going to carry most likely an embedded commission to it, and that's just a structure. Unfortunately, if you're kind of under that 100, 250,000 level, you're probably, if you're going to work with an advisor, it's probably going to have some sort of embedded commission. Once you hit kind of that 250 to 500,000 range of overall investable assets, then you should be paying a separate fee, one for the advice and one for the investments. And that's the structure that we have here. We charge for our financial planning advice, tax and estate planning. And then if you work with an investment firm, they will charge you a fee for the investing advice. So for anyone that kind of is in that sub underneath the 250,000 mark and you're watching this video and you're not sure, like, am I in the best spot? I would look at, like, what type of investments do you hold? What kind of support do you need? And are you getting that support? If you feel like, hey, I'm paying all these fees within, my mutual funds or investments, and I know I'm paying that 1% planning fee, which most products have embedded into the product, am I getting that planning advice? And if not, you're going to want to look to switch. Now, you might move sideways, but find an investment firm that maybe has a similar type of structure, but will actually give some advice and help and support along the way. A lot of people with embedded commissions aren't getting the support they need. That option's out there. You need to search around and talk to more people. Now, if you're kind of above that 250 to 500,000 mark and you're still sitting in mutual funds, it's time to review your accounts. I talk to you every single day, and it drives me crazy when I see a $1.5 million account sitting in mutual funds with embedded commission, and you're paying 2.5%, 3% in fees. And a lot of times you don't know it, and you're not getting any planning advice. For us, we have a $500,000 minimum. Most planning firms will. And what we do is we strip out the planning and the investing. And again, depending on how much assets you have, the fees are going to be a little bit different. We do have all this information on our website, parallelwealth.com/investments. You can learn a bit more about our process. But again, you need to find an advisor that works with you. And a big part of that is trust, someone that you can lean into, what they do, their process. And so I encourage everyone I speak to and all of our clients to interview 2 or 3 advisors. If you're looking for a new advisor and you're under that 250,000 mark, ask, okay, what type of product are you selling? How are you paid within that product? And what are my overall fees? And then you can do a cost analysis. Like, is this worth it? If you're kind of over that 250 to 500 mark and you can find a fee for service advisory firm like us, then again, ask, what am I paying? What am I getting? What's the ongoing commitment? A lot of you have transitioned to the DIY model. And this is what I want to touch on now is, okay, I've moved to DIY. I enjoy doing my investments, or it's working well, but I feel like I'm not on track for retirement and I need some planning. And I think this is where Evil Twin was kind of hinting of, okay, Adam, I'm okay on the investing side, or at least I feel I'm okay. I need help on the planning side. What does that cost today and what does it cost ongoing? So there are a number of fee only or fee for service advisors in Canada. And basically what that is we charge an upfront fee. We grab all your information and map out a plan for you. And I always say, my job here is to make sure our team is taking your paper maps, putting it together, and giving you a GPS roadmap. That's really what we're trying to do. You have all your income silos. We're trying to put all that together in a tax-efficient income plan for you and just walk you through that process. And then it's on you to implement it. So here's a strategy. Here's a plan. Here's what you need to do next steps. It's on you to then go out and implement that, whether it's drawing out of your investment accounts or converting RSP to a RIF or whatever the plan outlays. We will go through that with you, provide that to you, and then it's on you. So typically a fee-for-service plan, depending on how complex your situation is going to be anywhere from about $3,500 to about $7,500. If you have rental properties or corporation, typically like $5,000 to $12,000 is your range. Now again, that's an upfront fee one time. You'll get the plan, a bit of support, and then you'll move on. If you need a plan update down the road, Evil Twin asks, like, okay, what does it cost ongoing? I know for us, what we do is we charge 50% of our planning fee. So if you loop back with us in 2 years and you need an update on the plan, then that plan's going to cost you 50% off. Every planning office I find is a bit different. Most charge the full fee once again. Some have more of a monthly retainer where they're going to charge you, $500 a month, and you can kind of reach out to them whenever you want. So again, you have to interview and find the solution that works for you. Make sure the planning matches what you're looking for. They're able to give you the granular detail that you're looking for. Ask them for a sample plan. Again, we put our sample plans right on our website at parallelwealth.com/planning. All of our prices are there, a sample plan, our structure, everything's there. It's way easier for me to say, here's what you get. And then you're not, phoning us and emailing us. You can see everything there. But typically, as I always say, when we create a plan, I hope that lasts for 5, 10, 30 years. Now, of course, where it gets off track is my investments did better, inflation was higher than I expected, investments did worse, I spent more money. And you got to set these goalposts. And when we deliver a plan, we talk about, here's the goalpost. If you fall, 15, 20% outside of those goalposts on the other side, then maybe it's time to loop back and get a plan update. Again, markets will drive that. Like right now we're down in the markets. Now give it some time to come back. Like look at the average over time. But again, that's the structure. So if you're sitting on the sidelines doing DIY right now, if you feel like you're not on track with retirement, I encourage you to look for a fee-for-service advisor. That's kind of get a plan, you implement a plan. If you're looking for more of an ongoing support, then you want to find an advisor, ideally with a CFP. If you're looking help on the investment side, a CFA. Ask them for reviews. Do they have client reviews that they can share with you? Again, ours are on Google. We ask our clients to write them on Google. But client reviews, how you operate, how you get paid. Every advisor that you work with should be able to tell you exactly how they get paid, and you should see that payment on a statement. Exactly what they're getting paid on a statement. And if that visibility isn't there, to me, that's a red flag, and it's time to move on. So as someone that's been in this business for almost 20 years, I've seen a big change in the industry, and unfortunately, most advisors haven't adapted to that change. And the change has been, we've moved from more of a commission type structure where it's an embedded commission in the product to more of a fee-for-service approach. And that's where we've transitioned. We transitioned that way back in 2017, where we moved from the commission style embedded product to we're going to focus on the financial planning side of things. And we'll let the investment professionals do that, and we'll come alongside when need be. But we're going to strip our fee out, charge a set fee for our service, and call it a day. No more embedded products, embedded commissions, all of that. So if you're still working with an advisor that's living in 2010 or earlier, it's time to push them back on that. See, are they making changes? Are they actually looking forward? Again, a lot of the times too, you're paying 1% or more just to the advisor on this side. The fees have come down. There's been a squeeze on fees. Most advisors haven't accepted that. You need to find someone that's paying, you should be 1% or under for advisory fees. Once you get to the $500,000 mark, you should be 0.75 or under for the advisor, and about the same fee for the investment firm. So again, if you're $500,000 or more, 1.5 in fees should be kind of that level that you're at, plus or minus a little bit, depending on the type of investment, the service, and all of that. But make sure you're getting really good investments and really good planning. That's really, really important. If you want to learn what really good planning is and our process here at Parallel Wealth, we'll link that video now.